Welcome back. You're watching us here on Halftime Report. While we're talking about, the markets at large, let's look at the property markets as well. Mumbai recorded over 11,500 property sale registrations in February as per a Knight Frank report. Remember, registration for properties worth more than 5 crore rupees have surged 15% as well. To discuss this and more, we have Gulam Zia, who's a Senior Executive Director at Knight Frank India, joining in. If you look at the kind of registrations that were there before, etc. as well. Gulam, the question is, what's the prognosis from here? Do you think it's likely to slow down from current levels, largely because of, one, the higher base, and secondly, because the wealth effect that may be taking place in this market because of the decline that we've seen in equity markets? Just trying to understand the prognosis from a real estate standpoint.
Well, there are 2-3 different ways of looking at these numbers. First of all, yes, the numbers you're showing is actually updated because by the time the February ended, we have seen more than 12,000 numbers in this February as well. The number that we had shared with you was a day prior, just about morning of 28th. And then we did see a good closure. And that was actually for a per day rate of more than 430 units. February happens to be a smaller month. Numbers are also increasing month on month. So it is something where we are not yet completely sure. While a lot of them are already trying to paint a very bleak picture for real estate sector, but at least Mumbai registration numbers are not showing any letdown or any kind of a shrinkage yet. We have to wait. So what you're talking about, the impact on wealth creation, etc., is obviously there to be seen. Of course, the largest segment of affordable housing or the lower housing, which was mid to lower end of housing, has seen severe damage, has been shrinking. But the upper end continues to do more transactions. In fact, even in the month of February, we have seen more than 5 crore apartments selling, much better than the previous 2-3 years of February, and overall month-on-month improvement as well. So it's a bit too soon for us to draw that conclusion that there is a slowdown in the market. At least Mumbai numbers are not showing it. If you expand it to other markets, you may hear about a few of the markets actually showing some amount of slowdown, but at least Mumbai market is not yet showing any slowdown in spite of the indicators that you're talking about, whether slowdown in stock exchange or other wealth creation measures, global issues, etc. But whatever said and done, Mumbai numbers are continuing to be where they were for last almost about 2.5 years, which is just inching up. While it is kind of flattish, but still there is no sign of any crack yet.
Gulam, good afternoon. Thank you for joining in. You're seeing no signs of any let-off, at least on the premium housing side. But what about affordable housing? Because just to mention, I was having a conversation with a friend yesterday and he was mentioning that the monthly rent for a 1 BHK in a suburb like Vileparle is around 60,000 rupees. So what is the demand side looking like on the affordable housing space? You mentioned in the previous interactions that it's not looking very good as compared to the premium housing. Has that changed?
So here are two aspects I would love to bring out since you're talking about these two, which are not really connected to each other. First of all, the affordable housing market of Mumbai. In fact, this was one market which, and surprisingly enough, when you talk about pan-India top 7-8 top cities of the country, Mumbai is one market where affordable housing, which was below 1 crore, even below 50 lakh, was selling the maximum in terms of absolute numbers. Of course, it's a large market with a lot of smaller satellite cities and towns all around India and MMR region. But that said, even in Mumbai, the share of that segment is actually shrinking much faster. It is barely 25 odd percent, which used to be 29%, almost 20% shrinkage we are looking at as far as that segment is concerned. And which is then compensated by mid to upper end. But that segment itself is under serious concern because transactions are slowing down. On the other side, new launches in that segment have also been shrinking a lot. Now, the other aspect that you're trying to talk about is increasing rents. Well, rent increase, especially in Mumbai market, is more because of the redevelopment projects that have been launched in last year and a half or two. Every such project where a developer takes up a redevelopment of a society, the people who have been living there earlier would immediately scout for properties on rent for 2 years, 3 years, 4 years, as long as the developer takes to rebuild that complex. And that is why the demand for rental housing has shot up a lot. In last 2.5, 3 years, pretty much every society is considering redevelopment. Anything which is more than 25, 30 years old is coming on the block. And that is the reason behind the rental housing demand shooting up a lot. And that is directly showing the rent of such properties shooting up.
Right. Gulam, typically we call you on the report that you've written. This one's on Mumbai registration. But we can't let you go without your perspective on real estate in general in the country itself, and any sort of outlooks that you're getting from commercial and, mall real estate as well. In the recent, commentary that we've heard from everyone, consumer sentiment has been fairly low. You yourself were among the first few to put out the report saying that the mall vacancy has been the highest that we've seen in India, ghost malls, etc. Have you seen any signs of, high frequency data that suggest any sort of improvement, or do you think it's stagnant at best and declining at worst?
Well, first starting with retail, the malls that you're talking about, there, in a very short answer, it is stagnant. It is not really deteriorating at all. It is going to be the same for next couple of months or couple of quarters for sure. But on the other side, office sector is improving, as we have spoken earlier as well. The story in commercial real estate, the office sector, is starkly different than compared to what is happening globally. So in India, the office space demand has been shooting up. And that continues. Like when we last did this report was December of 2024, there was a marked improvement, almost about 70 plus odd million square feet of office space absorbed in the last calendar year, which was historic best. And that continues. Even in the early month, January and February, we are not looking at any slowdown as far as the office market is concerned. So overall, if you look at the broad perspective of residential, office and commercial is going stable. Retail is going stable. Offices are actually still looking up. And residential, of course, while we started with just Mumbai, but there are signs of worry all over. But the numbers of residential transaction in Mumbai is not yet showing any slowdown. So that's the overall perspective of real estate in India.
The residential market in Mumbai is not showing any signs of slowdown.
But, the bigger point was that he said that there are signs of worry in residential demand across the country. So that's something that we'll most definitely need to keep an eye out on.
Indeed. So keep an eye out on all of these developments within the space. Gulam, thanks a lot for sparing time and joining us this afternoon. We take a short break here on Halftime Report, shifting focus back to the markets. The Nifty has seen some bit of recovery from the lows of the day. Sudeep Shah of SBI Securities joins in on the other side for a quick chart check. Stay tuned.